Good afternoon. Welcome everyone, and thank you for joining us today. We are super excited to have you here with us for this virtual event. We have a fantastic lineup of speakers and topics that we would like to discuss today. We do hope that you will walk away with some fresh perspectives and potentially some new ideas. During the event, feel free to engage and ask questions. You can use the YouTube chat, but also you can send us emails and reach out on LinkedIn, and we will get back to you after the event. Now, let's get started. What got us here today is this book, Supercharging Sustainability, that I authored. It provides an accessible big picture overview of ESG 2.0 and sustainable finance. ESG we know, and it's a synonym for corporate sustainability. ESG 2.0 is what I believe is an updated version of ESG. It has streamlined the kinks and issues with the initial idea of ESG, with better standards and frameworks and new regulations, which you know. Personally, I feel ESG is a solid framework to break down sustainability. We have environment, society, governance, and prosperity. But the big question is, will ESG as a concept eventually disappear or live? And if so, if it disappears, what will replace it? We are already seeing signs of leading organizations ditching the ESG concept, partly due to political backlash, for example, in the US, as well as issues of greenwashing and communication or difficulty in communicating acronyms. Instead, they're using corporate sustainability or simply sustainability, or focusing on talking about the underlying concepts like pollution or diversity, so not put it in the acronym picture. My book demystifies the complex field of sustainability and sustainable finance, and I aim to offer a clear guidance for corporate and financial market employees, board members, business owners, and future talent students. Even though it's not written for experts in the field, it can be helpful for them both as a refresher, but also to help get their colleagues and organization up to speed. In the book, we start by looking at the past, looking at international agreements from 1972 and onwards, which laid the foundation and the ground for what we're discussing and focusing on today. We go and talk about global challenges from the 9 planetary boundaries framework, which includes climate change and biodiversity, and that we have already exceeded several of the boundaries in that framework. We also discuss lack of trust, just transition, geopolitics. The book acts as a dynamic training program designed to align your organization with current and upcoming shifts in sustainability practices quickly and efficiently, as it breaks down the ESG framework with multiple case studies and insights. Even though research tells us that good ESG performance may lead to competitive advantage and better business when focusing on what is material, that can only be true when business fundamentals are sound. Laser focus on revenue, cost, cash flow, balance sheet, that's still a name of the game. When those fundamentals are healthy, a sound approach and materiality focus on sustainability can and will most likely lead to outperformance. So it's both. You have to do good ESG, but you also have to do good fundamental business. Good ESG practices and scores, they are not a cover or a cure for weak business fundamentals. Drawing from a couple of decades of international experience in senior leadership positions in banking, finance, and professional services, and working with household clients across the world. My motivation primarily stems from my dedication to learning more, sharing my knowledge and experience, and a belief that we can build a sustainable future. But to be clear, what is a sustainable future? That can mean different things to different people, and how we get there depends on the person you talk to. And that's the debate, which is interesting. And that's what the purpose of my book is intended to help you clarify or reach your own view on how to get there. But enough of the book. Let's get to know my fellow panelists, Roksana and Jane. Roksana, if I start with you, can you tell me a little bit, or tell the audience a little bit about yourself, your background, and the focus of your work? And I'd be especially interested to know a little bit more about your work for POLSIF and the Polish government.
Yes, of course. So first of all, thank you for the invitation. I'm really happy to be a part of this book launch event. Congratulations, Bjarni, for the great work, great book. So as you said, as you mentioned, I am a lawyer, but I am not this stereotypical lawyer. On a daily basis, I advise clients on integrating ESG considerations into their businesses, investment activities, lending practices. So I translate the ESG regulations and help them to implement those regulations in practice. I started my career in a big law firms in 2017, and I worked for Clifford Chance, the magic law firm. Now I work for White & Case. And in both of these law firms, I was involved in negotiating complex transactions and both crafting innovative solutions. And that's how I got familiar with the sustainable finance concept and sustainable finance regulations. And I decided to broaden my knowledge on these topics. And here I am today. I was involved in pioneering transactions on Polish market. For example, I advised on the first sovereign green bond issue. The first sovereign green bond was issued by Poland, the Republic of Poland, and I had the pleasure to advise on these transactions, but I also advised, for example, on the first ESG rating-linked bond in CEE region for Orlen, which is an oil company in Poland, and the first sustainability-linked loan for a company from the mining sector. It is called JSW in Polish. So I was mainly a transactional lawyer, but I decided to shift my focus. I am still doing sustainable finance transactions until today, but I also am involved in regulatory matters, ESG regulatory matters. And in April, I was invited, as you said, by the Ministry of Finance to join this expert group on the development of the green bond market here in Poland. And during our works, we focused on potential solutions, how we can accelerate the green bond market here in Poland and also in CEE region. And you asked me to also describe my work for POLSIF. So POLSIF, this is Sustainable Investment Forum Poland. The full name of the organization is the NGO I co-founded, and I am also the vice president of this association. It is a part of Eurosif network. Maybe you heard about it. And I co-founded it with 28 other passionate individuals from Poland, passionate about sustainable finance, which includes former ministers of finance, former ministers of environment, board members of big Polish and international banks. So I am really glad that we managed to create such an initiative on our local market in Poland, which is quite needed. And what is sustainable, what what is POLSIF? Maybe I should also introduce our organization. So we mainly promote sustainable investment practices in Poland. We are also a forum for practitioners to network and to know each other, to share knowledge. We also advise our government and other financial institutions in implementing sustainable finance regulations. And we are, just starting, but we have almost 100 members. So I am really proud of this project. And the last development in my career, so in February this year, I was asked by Polish Ministry of Economic Development and Technology to take part in this new project to educate SMEs on minimal safeguards under the taxonomy. So yeah, so that's all from me. Thank you.
Thank you, Roksana. And yeah, likewise, Bhagyashree Jane. Tell us a little bit more about yourself. And you were recently featured in the Forbes 30 under 30 list in Asia, and you run a company called Disposal Company. Tell us a little bit more about yourself.
Absolutely. Hi, everyone. I'm super glad to be a part of this wonderful conversation today. And many, many congratulations, Bjarni, on the wonderful book. I've had the privilege of reading your book early on. So brilliant work there. And thank you so much, Roksana, for being a part of this conversation. I'm super happy to be on the panel with you. So a little bit about myself. I started my career with the Delhi government, which is the capital city of India. I started my work as an advisor to the chief minister on public grievances. From there, I got an opportunity to work on the early days of plastic waste pollution management here in the country. We worked on getting a lot of technologies from countries like Germany and China. So just getting these initial technologies to India and then working our way through creating solutions that fit the Indian pollution problem. Because I think pretty much everybody today is aware that we do not have a very sophisticated waste collection system. So this was again my primary motivator for starting the disposal company, which I started about 4 years ago. I've just worked for the last decade in the same domain. We started the disposal company with the idea of democratizing sustainability in a country as large as India. So we started with plastic neutrality, and now we've also expanded our services into helping MSMEs become plastic and carbon neutral, apart from also helping them with business sustainability reporting. So today our two major motivators are, one, of course, the waste management on ground, and secondly, the social impact that we create through upliftment of the waste workers who've traditionally been ignored in this work of line. So yeah, and I'm super grateful to be featured in Forbes 30 under 30 in the social impact category. I hope to bring India's initiatives in the ESG sector and in sustainable finance on the global map.
Brilliant. Thank you for this. And I know the audience appreciates getting to know you a little bit better, especially now that we are going to move the discussion into the big picture and some macro trends. We are all from, even though Roksana and I are from Europe, we have different perspectives maybe of the continent, and you are sitting in India. And considering the big picture in any field is obviously important, especially in sustainability, where we are working on, where we need to move fast, work fast, think about short-term impact, but always never forget the long-term impact of our work to build a sustainable future. So I wanna move the mic over to you, Roksana, again, and ask you, what are the three big macro movements in sustainability and sustainable finance that you are thinking about right now?
Okay, so this is a tricky question and very difficult one. So I need to point out at the beginning that I am based in Poland, as you said, and I am advising mainly on the Polish market. I'm Polish, I live and work here. So I may be a little bit biased when I identify those three trends. Of course, those trends are vital from the European perspective as well. But there may be some controversy when I look on this trend from my unique CEE perspective, CEE region perspective. So I will tell that there are 3 trends which are, in my opinion, very important and both controversial. So first trend is transition finance, for sure. A second trend, it's quite obvious, so integrating ESG criteria into financial decisions. And the last trend I would like to talk about is the change of the purpose of the company and also shareholders' involvement. So I would like to talk about those 3 trends which are very important from my perspective, and also from my perspective. In my opinion, these trends will shape our future, and we should also focus on these trends and maybe solve some problems which are occurring in connection with those trends. So, and also please remember that I am a finance lawyer. I am also advising on regulatory matters, but mainly my clients are financial institutions, so both banks, funds, quite a broad group, but still companies from the finance sector. So maybe I will elaborate on the first trend, which is transition finance. So maybe we should first explain what transition finance really means, because this is not so obvious for everyone, especially for those who do not work in financial sector. So this transition finance sector provides the necessary capital for these high carbon sector companies to transition towards more sustainable practice. So it helps us to encourage a wider range of industries and companies to engage in sustainability efforts. So it is a broader concept than a green finance. In green finance, we finance pure green projects, like, for example, wind farms, solar farms, and so on. In this concept, we are more focusing on the companies which are negatively impacting the environment or other social aspects. And we are somehow recognizing that not all companies are currently able to meet those very strict ESG criteria, but they are at the same time committed to somehow improve their sustainability performance, so to minimize this negative impact. So this inclusivity is crucial from my perspective for this comprehensive and effective global transition to a sustainable economy. But there are many controversies connected to the transition finance, and I would like to tell something about it. So in my opinion, transition finance, especially in the CEE region, which is high emission industry region, because of our history, the history of communism. The communism left us with high industry, a lot of emissions and so on. And in my opinion, it is more impactful even than this pure vanilla green investment, just to help them to reduce this negative impact they have on the environment. But this is also very controversial from the financial institutions' point of view, because as I spoke to my clients, they say to me usually that at the beginning of this sustainable finance trend, they decided to discontinue their relationships with these companies from these high carbon sectors while cleaning their portfolios. And in their opinion, sometimes there is no way back. So they are mainly focusing on the pure green projects, and it may be hard for them to come back to those relations. And in my opinion, they should come back. They should somehow help those companies to minimize this negative impact. On the second trend, so integration of ESG criteria into investment decisions, of course, it's obvious that nowadays, most of the companies, investment companies in Europe are taking into consideration those ESG factors. They are creating their strategies, they are realizing their strategies, and more investors are somehow recognizing that these ESG considerations can lead to this better long-term financial performance and risk management. They are also taking into the consideration the fact that if they do not decide to take ESG into the consideration, they are facing additional risks, like, for example, physical climate risks, like related to the impact of the company on the environment, which, for example, causes climate change effects like floods and so on, storms, which may negatively affect the being of the companies. But there is also this transitional risk. So the companies which will not align their business models to this new concept of the economy we are currently pushing forward in the EU, this green economy, they will somehow lose profits, and shareholders will also lose their profits as well. So maybe this is also a thing to think about. And the last trend, because I'm running out of time, sorry, this is the change of the purpose of the companies and shareholders' involvement. So until now, companies were mainly established to generate profit at all costs sometimes. And this is the approach which is no longer okay. This is no longer applicable, in my opinion. And companies should, and some companies do already, rethink of their purpose, like they are making ESG the part of their day-to-day business. And also the shareholders are increasingly using their influence to push for better ESG practices within companies. We see those movements of NGOs buying shares in oil companies in order to sue the board members or to sue the company. And I think this is very important trend from our European perspective. Thank you.
Thank you, Roksana. And we're like super interesting three concepts you mentioned: transition finance, integration of ESG criteria, and the purpose of companies. Taking this discussion over to you, Jane, what are the three macro trends that you are thinking about today?
Of course. So, like, before I begin, again, because I am from India, I need to clarify that we probably are a few years behind, in the first world countries, or where you are based. But having said that, the sustainability and sustainable finance space in India has been gaining significant momentum in the recent years. Now, this is like primarily driven by the growing concerns over environmental degradation, climate change, and the need for inclusive and responsible economic growth. Of course, drawing that from Roksana's statement that the businesses which are not aligned with ESG are of course facing a higher risk. So the three major, macro trends that we are witnessing here in India would be, firstly, the policy and regulatory initiatives. The Indian government has taken several policy initiatives in the recent times to promote sustainability and sustainable finance. Now, these include, firstly, National Action Plan on Climate Change. Then we also have the Nationally Determined Contributions, the NDCs, under the Paris Agreement. And then we also have the Sustainable Development Goals that India has adopted, for the future development. Now, Indian primary agencies, the government agencies, are working. For example, the Security and Exchange Board of India, SEBI, has mandated the inclusion of business responsibility and sustainability reporting for all the listed companies. And also the Reserve Bank of India has introduced guidelines for priority sector lending in areas like renewable energy and sustainable agriculture. So these policy and regulatory initiatives are one of the major trends that we've seen in the country and that are propelling us forward in the sustainability and sustainable finance space. The second trend that I would like to highlight would be sustainable investing and green finance. Of course, it's very similar to like how Roksana again said, said, like it's the sister of the transition finance, but we are still like in the space of we are extremely like robust in the green finance sector right now, space right now. So there has been a rising trend of sustainable investing and green finance in the country. So several financial institutions, including banks, mutual funds, venture capital firms, have launched dedicated green bonds. Example, the State Bank of India has issued green bonds to finance renewable energy projects. And also the Indian Renewable Energy Development Agency, which is known as IREDA, has been actively promoting financing for renewable energy projects in the country. Now, the idea is that we want to integrate ESG into the investment decision making process, of course. And lastly, the trend that I'd like to highlight is the business responsibility, the corporate responsibility in financing. So again, BRSR reporting has become mandatory for all the companies in the country, and we are constantly introducing our own for norms and formats in the space. So these things are the three primary trends that we are seeing here in India.
Thank you, Jane. And maybe one quick follow-up question to you, Jane, if you have a quick answer to that. I mean, as you pointed out earlier, India may be lagging behind, let's say, Europe or Western Europe or the Nordics, but couldn't India still be a role model for other parts or regions of the world?
Absolutely. See, like while we have lagged behind in introducing these regulations and initiatives out there, but our government and also other agencies, which includes the financing sector, which includes the corporates, which also includes the learning sector, has been working on creating defined and structured frameworks around these. So I think G20 was one of the recent developments. India's G20 presidency was meant to showcase to the world that we are very actively working on ESG, and this is a very core issue to our own development as well, and of course our contribution to the world. So yeah, and I think we are in a very great position to more than make up for our lagging behind, of course, with the global support.
Brilliant, thank you, Jane. And now that we're getting close to wrapping up, I want to extend my deepest thanks to Roksana and Bhagyashree Jane, two super exciting personas in the sustainable finance space that you should definitely look forward to in the future. Again, coming back to this question, what is a sustainable future? In my book, I plot this line, which doesn't really have a defined axis, but the question is, if you would write and plot a line for a sustainable future, how would you do it and how would you define it? That's the question. I want to extend my thanks to everyone who supported me and helped me throughout the writing process of the book. These people and many more. Super happy about that. And then again, thank you for joining us today. And again, thank you, Jane. Thank you, Roksana. You can find my book on Amazon.com by following this QR code or looking up Supercharging Sustainability. Thank you again for today. Hope you have a great rest of the week.